We're a REIT that's been in business 53 years, so there's plenty of pent-up appreciation in our properties that maybe the market still hasn't noticed. The growing revenue, growing FFO, and then lastly, the savings from redeeming the preferred should result in increased dividends.
I'm here today with Sam Landy, President and CEO of UMH Properties. How is UMH working to increase the supply of affordable housing in the markets it serves?
We have over 3,000 vacant sites that we buy homes from the factory. We put these homes in as rental homes. They're 3-bedroom, 2-bath houses. Costs us about $80,000, and we can rent them for about $900 per month. So we're improving the supply of affordable housing in the markets we're in, and we're also working on 400 lots to build per year as expansions. So, and we're working with MHI, the National Manufactured Housing Association, to make it easier to get approvals to build communities. And we entered into a joint venture with Nuveen, and we're building 3 communities in Florida that will increase the supply of affordable housing there.
What impact is inflation having on UMH's strategy with regard to rent increases?
We're trying to limit our rent increases to 4%. We're looking at the difference between what we're raising rents and what apartment and rental houses are raising their rents as more of our competitive advantage. We're trying to widen that gap. And because we have the ability to increase supply, we hope that that increased supply will make up for the increased costs. If we add 800 rentals per year at about $9,000 per rental, we'll gross another $7 million too, and hopefully that offsets any expense increases so we can obtain the difference between what inflation is costing and what we raise rents by new revenue instead of raising the rents to the existing people.
What geographic markets is UMH keen to enter, and how difficult is it to make acquisitions?
So we've been working on going to the Southeast. We're incredibly successful in the Marcellus and Utica Shale area. That worked out. I don't think anybody can doubt that strategy today with energy prices where they are. We've looked at the widening of the Panama Canal as a reason for all the shipping that's backed up in California to now come to the Southeast. Then they'll use inland waterways and ports that are underutilized. So we expect the Southeast to grow faster. We've done 2 acquisitions in Dothan, Alabama, 1 in Sumter, South Carolina, and the 3 in Florida. And so, we want to continue to do acquisitions in the Southeast. Acquisitions remain very difficult. We were such a success at turnaround properties that many people imitated us and duplicated what we did, so that those projects are bid up. But we've looked at it, and if you look at the cost to build new at about $100,000 a site, and on some of those sites you'll make a $30,000 sales profit. So we think building's the best way to go today, and that's what we're working on.
As you meet with investors, what are the 3 top reasons you would say to invest in UMH today?
Well, number 1 is we're redeeming the preferred in July, and that's approximately $250 million at 6 3/4, and over the course of a year, that adds about 14 cents in funds from operation. So, that makes it highly likely that the funds from operation for 2022 will exceed 2021, and 2023 will be higher, which makes a dividend increase likely. Additionally, the shortage of affordable housing is more than 7 million units, so demand should stay strong for many, many years to come. And with strong demand, we get appreciation in the value of our communities. We have increased revenue, increased profits. If we just grow the company, the increased size and liquidity should result in a higher stock price. But on top of that, we're directly growing earnings per share. We have been doing that. We've increased the dividend 2 consecutive years. And so it's highly likely we can continue to do that.